Hey traders, a very warm welcome to you. Okay, so I've talked about this a lot. How do you know when your strategy isn't working anymore? Well, I haven't talked about this specifically, but what I have talked about is developing a strategy that fits into the market conditions. So if you're trading a trading strategy, you want to be a trending market. You're trading mean reversion, you want to be in a range bound market. That kind of thing. There's no point in trying to bolt a trading strategy into a market that's not isn't the right kind of market. And this is kind of the thing that you will see very often as a trader if you kind of go through a lot of phases, several months, several years of trading. You know, your trading strategy will work very, very well. It will work in the market, and the market will change condition, it will change phase. So the big question you have, and actually this is something that automated traders have a question all the time, is they kind of say, okay, well, when do I stop trading the system? How do I know if my equity starts doing this and I start having a string of losing trades, if it's just a drawdown with the system and the strategy, or is it just not working anymore? Do I need to reevaluate and the market conditions have changed? Well, obviously you can look and eyeball the situation. An eyeball situation means, hey, have we literally has the market just gone completely quiet now? Are we in the kind of the last part of the year, or is it summer, or is it something, or has something affected the way the market's changed? Has the ATR reduced and you're used to a big ATR? And you can see that for yourself, and you can say, well, actually, do you know what? Really, this strategy thrives on expansion, volatility, you know, decent ranges. We're narrowing down a bit. Let me cap it off. Let me dial down the system. Let me either take in the premium trades, or let me reduce the size, or let me just stop the system altogether. So that's one way you can do it. Another way you can do it, which is quite an interesting way, I think, is, let me get a color pen out for you from the desk here, is you can have you've got your equity curve there, and that's obviously very, that's very unusual to have an equity curve like that. Let's put more of a usual equity curve in that we probably would see if we're trading. So, you know, there's our P&L here, and we kind of normally would do this, right? You get bursts, you get pullbacks, you get but generally you kind of want to see, you know, this kind of growth from zero up to wherever that is, hopefully at several million, but you get the point. But what you can do, and a way of doing it, is just to use the strategies that we use every day in our trading, is put a moving average on it. Okay, so this is very, very simple and very, very crude, but it's also very, very effective. You've got a moving average on there, whatever that may be, 50 period, 100 period, maybe too much, you know, this is a way you've got to adjust it. But what you would do is, as your, I'm so used to saying price with the moving average, as the actual equity value of your account starts to fall below that moving average, you cut the system. Now, of course, the higher the moving, the faster the moving average, i.e. the shorter the number, so you've got 5, 10, 20 period, they're quite quick moving averages, 50, 100, 200 quite large, you're going to have to adjust how much you give back. So a really tight moving average, let's use a different color pen here if we can, a blue one, is going to be good for not giving back so much, but you might end up stopping it just on a drawdown. So this is the question for you to answer for yourself. But if your system's working very, very well, your strategy is working very, very well, and then you're drawing down, and maybe you're crossing a moving average on your equity curve, and this is quite easy to plot, by the way, in something like Excel or anything else out there, that's when you pull the plug. You know, you stop the strategy and you reevaluate, and you say, well, actually, you know, I haven't pulled down to that moving average before. This is the kind of protection level. And really, from a psychological perspective, it's quite nice to have that, because you can say to yourself, really, my account value is at my moving average. So even though you get these kind of spikes up, if this is what you're doing and you're using the moving average, it doesn't mean you're looking at your account balance and saying, well, I've got X in it. In reality, all you're doing is looking at your moving average balance, so that this doesn't hurt you when you come off from highs back to your moving average. An easier kind of trick from a psychology perspective. And you can do that. You can use that kind of trick as well, even if you're not stopping strategies, even if you're just kind of monitoring the growth of your account, monitoring the growth of the average of the account as opposed to the spikes and the troughs, kind of dampen those emotions a bit. Because you know what it's like, you have a kind of great week and you have a really boost in your account. Next week, maybe you draw down a bit. It kind of amplifies those emotions. Whereas if your moving average is just moving up, in reality, the moving average won't even tip down, because it will just be pulling back from that extreme move. So that's a good way of of knowing when your strategy isn't working anymore. And I know it's a fine line between, is it just drawdown? Is it a strategy not working? What is it? So you can either do the eyeball thing and say, well, actually, obviously the market has changed condition dramatically. I now need to see ATR go above this level before I turn on the strategy again, before I implement the strategy again, obviously if we're discretionary. Or using your actual equity curve and say, well, actually, you know, my strategy isn't working because I'm drawing down. Let me stop the damage. Let me just take stock of the situation. Now let me assess the market. Do I need to readjust this? Do I need to just pull it for a little bit because it's a couple of months of quiet period? Do I need to trade something else? And you can make adjustments and changes to your strategy and your plan from there. All right, guys, I hope that little tip or little tactic helps you out and gives you some ideas for how to kind of hold on to those gains, which is one of the big things in trading, not give them all back in a different phase and change conditions. If you enjoyed the video, thumbs up, take care, see you in the next one, keep the risk managed, goodbye.